heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from London and San Francisco, this is Bloomberg Technology. Coming up, full coverage of Tesla's disappointing second quarter results.
Plus, Google investors still waiting for an AI payoff. We bring you the details.
And an update from CrowdStrike on the global IT outage. But Ed, we get straight to it. A big fall in Tesla stock.
Yeah, I mean, the chart on the screen tells the story, right? We're down around 12%, 13% in the session. Intraday, that would be the biggest drop since January 25th. On a closing basis, a decline of about 12.5%, I think is the biggest drop going back to September of 2020. There's a lot of anxiety in the misunderstanding here. Fourth consecutive quarter of EPS missing estimates, but a record revenue quarter where we return to year-on-year growth, despite the estimate we would see a decline in growth. There's a lot to pass over. I think robotaxis are at the heart of it, Caro.
Yeah, of course, the delay being the key watchword. Here's what Musk had to say about the delay of the robotaxi.
I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things.
We turn to Craig Trudell because, Craig, it was your team, it was Ed, plus your team that broke down the fact that there would be this delay in robotaxis. This is the future of the AI underpinning of Tesla. Why are we so worried about this quarter's results?
Yeah, I think, it wouldn't normally be a huge cause for concern for an event to be pushed back by all of 2 months. I mean, how material is that for the company? Except, Elon Musk has really leaned into this being, the way forward for Tesla and, the reason why you should or shouldn't, invest in the stock. And so the slightest delay of this event to showcase, what he's essentially betting the company on as the company continues to have deteriorating earnings is, cause for concern, especially in light of the move in the stock in the lead up to these earnings. This was a stock that was really battered when they last reported results and has come roaring back over the last few months. So right. I'm not surprised to see the shares doing this.
And we underscore it's the delay of an event where we were going to unveil or see publicly for the first time a purpose-built robotaxi. Actually, in the deck, Craig, they went some way to explain the manufacturing process. It's going to be this, what they call revolutionary unboxed manufacturing strategy, but the inference is that will be post-2025, right? Automotive gross margin. Talk me through where the sell side is focused on that.
Yeah, there's a real concern here that, not only has Tesla cut prices, but it's cut prices and only seen sales shrink. And so that means you have to continue to cut costs, which, Tesla, to its credit, has done that very consistently for years. But it also needs a product to reinvigorate sales. And, Musk has really, spoken to the importance of being able to offer people more affordable EVs in order for them to, be adopted by a wider, set of consumers. But he really has not, been willing to sort of back that up with product. We've seen, the Cybertruck roll out, but you got to pay six figures to buy that truck. Where is the Model 2, as people like to refer to it, the vehicle that would be cheaper than the Model 3? And that's a real concern for folks who, are willing to credit him with his, vision and give him, some time to realize robotaxis. But he needs to sort of deliver in the here and now more affordable electric vehicles for Tesla to grow again.
Bloomberg's Craig Trudell, Global Autos Editor in London. Thank you so much. Let's get reaction to Tesla's second quarter from an investor, but this time a retail or individual investor. Alexandra Mertz, aka Tesla Boomer Mama, holds thousands of shares of Tesla and has done so since 2020. She's had previous careers in finance and as an investment analyst, but now works as a visa consultant in California. And on X, the social platform owned by Musk, is a prominent voice in that large body of individuals who do back Elon Musk and are bullish on Tesla's long term. Alexandra, good morning to you. Welcome to Bloomberg Technology. The most important takeaway from earnings and the earnings call for you, please.
Well, thank you, Ed, for having me. For me, the most important was actually that we're moving on into this next phase of Tesla's growth, and all the markers that we have laid there are still there and are moving ahead in the same timeline and with the same vigor than anticipated. So as a retail investor, I mean, I acknowledge that the market and your typical audience probably doesn't have the same large time horizon than we have. But for us, it is really, as a retail investor, just another buying opportunity. Also, do remember, we were at these prices at the beginning of the month, right? When we got the delivery and production numbers, the share price was about at the same level. When your channel broke the news that the robotaxi event was going to be delayed by 2 months, we were already a little bit higher. That's where we saw first fluctuations in the stock price. Well, now it is confirmed for October 10th. So it is a mere 2 months. Your colleague Greg is completely right. It is not a long delay. And there are technical reasons for it, but I also think, right, Tesla wants to be ready, wants to be sure to show whatever is necessary to convince the market, the retail investors, about autonomy, and that being the crucial part to Tesla's future.
Can you sell to us a little bit more, confirm to us how you understand full self-driving, the focus on AI, to eventually become some robotaxi fleet where suddenly we got a ride-hailing app out of Teslas? How does that become to bear in a good use, efficient business strategy way for you?
Well, I have my model, and I'm very happy to share that with us, but we don't have Tesla's model yet, right? That is what is going to be the quintessence of October 10th. So what I'm going to bring forward is my interpretation from former speeches of Elon and the Tesla team. So this may not be the current version. But for me, it seems very clear there's going to be a threefold business model. One, Tesla's own fleet, meaning cars that are either already in Tesla's possession, people handing back their leases or whatever else, inventory cars, whatever else they have in their own fleet, that are going to operate autonomously and that are going to be strategically put in cities at spots where they will have the best yield of a robotaxi business. Could be airports, could be shopping malls, whatever. I mean, that's probably to be tried out and found out how it's going to operate. So that is one part of it. The second part is that owners like me can participate and can enroll their cars instead of standing here in front of my house. It can just, travel around the day and pick up clients and bring them to the places they want to be brought to. And that's going to be a revenue sharing model. And then the third one is going to be the purpose-built robotaxis. So those are the ones that we're probably going to see.
Right, which is why the date of unveiling and seeing it was important. Just real quick, I want to think about the sell side for a second. One of Tesla's biggest bulls is basically moving to the sidelines after earnings. I'm talking about New Street's Pierre Ferragri. He's downgraded Tesla to neutral and is writing that the stock is at the target price they had, trading at 50 times their 2026 estimates. They see limited and unreliable valuation upside, etc. Now, we have you on the program as a retail or individual shareholder. How closely do you follow those kind of fundamental analyses that the sell side make and characters like Pierre?
Well, I follow Pierre a lot. He's French. I've lived a lot in France, so I love him. I love his accent. I love the way he's doing that. I think on this point he's wrong. And actually, I liked how he formulated his post, because he was not saying that he downgraded Tesla, but that New Street did it. So there was something bizarre about it. But let's put that aside. He doesn't see in the next 12 months major developments that could bring the stock higher. That's why they are putting it to neutral. I completely disagree. I think we're having in October on October 10th, Robotaxi Day. We'll also have in October, obviously, Q3 numbers. And then we're going to move into 2025 with a lot of announcements, actually 3 of them. We will have the Model 2, how Craig called it, the cheaper version of a Tesla be presented in early 2025. We'll have production of Optimus at the end of 2025. Right. So there is a lot of things happening. And he actually referred to energy being at its already 20% part of the profit of Tesla. Well, it's about 17% only. There is much more margin in energy. I mean, if you want to give me a minute to talk about energy revenues and profits, because they are not like a car immediately consumed at the moment of sales. They're actually over time, because when you sell energy, you actually get in the revenues and get in the profits in installments. And so there is a lot of waiting revenues and waiting profits already there, and there is much more to come. And I'm very surprised that Pierre didn't take care of that.
Alex, I'm really glad, Alexandra, that you bring up the other parts of just the cars, the Optimus side of things, the energy side of things. There's also the Dojo side of things, and many trying to understand the logic there. Just take a listen to what Elon said last night.
We are going to double down on Dojo, and we do see a path to being competitive with NVIDIA with Dojo. And I think we kind of have no choice, because the demand for NVIDIA is so high.
NVIDIA shares down, as is most of the market today, but some saying, look, because maybe this is a lack of demand that's going to come from Tesla going forward. Was that a surprise, ultimately, that they're really going to be ramping up Dojo because they are worried about the supply side?
I'm so pleased you're bringing this up, Carolina. Thank you so much. Well, it is actually funny, because over the last 5-6 years, Dojo was always one of those topics in the earnings calls. So, shall I do it? Shall I not? Am I doomed not? It was really going, it was a dance. And I've actually done about 6 months ago a whole timeline of non-committal. We would like to do it, but we're really not sure. Don't bet on it. Dojo is really not so clear yet. This is the first time that Elon clearly said, we actually have no choice. We're going to double down on it. We're going to do it. And this is a fabulous news, because these supercomputers are so far ahead and will make the whole Tesla infrastructure, the whole digestion of videos and output so much more profitable, rather than purchasing the NVIDIA chips.
Alexandra, we're running out of time. We have a lot to get to. So I want to ask, would you vote in favor of Tesla investing in XAI per the poll and the exchange last night?
I love that you did the yes. Thank you very much. I appreciate all of those. So we're close to 69%, which is always a fun number, isn't it? Yes, I would actually vote for it, but not unconditionally. You know how I like doing the analysis of things. This morning, we just had news that OpenAI will probably produce another $5 billion loss this year. I think these AI companies need to be thoroughly analyzed. In principle, I love it. I completely understand why it was a segregated entity from the start. Elon re-explained that yesterday. Those engineers don't want to be in a mega cap company. They want to have all the upside of a small startup. So it needed to be set up that way. But also, I fully understand that Tesla needs grok, needs all this input. And Tesla has at the moment $30 billion of a cash line. So investing $5 billion into XI could be a good idea.
Okay. That was a screen grab of the poll, not any member of the Bloomberg Technology team voting yes on it. Alexandra Mertz, investor in Tesla, retail shareholder, thank you. Now, some other news. Earlier this month, it was reported that Elon Musk had pledged to donate $45 million a month to a super PAC supporting Trump's presidential campaign. On Tuesday, Musk confirmed on X that he would be making donations, however, at a much lower level than what had been reported. He did not say how much he had contributed. Kara.
Well done for clearing that up. Meanwhile, let's check in on these markets. The Nasdaq currently off by 2.6%, the worst day since July the 17th. We are trading at the lowest since June the 11th. Why are we lower? A worry that AI just isn't reaping the rewards in the here and now. So coming up, we dive into that. We take a look at Alphabet's earnings, what it tells us of investors' antsiness about AI and its rewards. Ayoko Yoshioka's with us, Wealth Enhancement Group. This is Bloomberg Technology. Alphabet shares falling after the Google parent sunk more resources, $13 billion worth, they expect, into driving to outmatch rivals in artificial intelligence, fueling spending higher than analysts have been expecting. CFO Ruth Porat wanting to sound some reassurance on the call with media yesterday, saying, quote, "We are seeing the benefit of our strength in AI infrastructure as we generative AI solutions for cloud customers. There is no question customers are turning to us as they are building out their capabilities." Let's discuss all of this. Ayoko Yoshioka is with us, portfolio manager over at Wealth Enhancement Group. You hold shares of Alphabet. They're down the most since February. Look, revenue up some 15%, earnings per share jumping 31%, but it seems to be this idea of plunging $13 billion per quarter into AI that is the real worry here.
Sure. Hi, Caroline. Thanks for having me. You know, in terms of Google, we thought it was a pretty solid quarter. You know, we had strength in revenues out of search and YouTube, and, you know, cloud was pretty strong. Now, the $13 billion that is being spent on CapEx and the $25 billion that's been spent so far year to date, you know, you take that and you say it's going to be $50 billion for 2024. You know, Google still has $80 billion of net cash on their balance sheet. And so, you know, I think the spend is warranted. That infrastructure is really needed. They needed it to do it for the cloud growth to begin with. And so, you know, it is something that all the hyperscalers are continuing to do in 2024. And investors are just asking, you know, what is that return on investment at some point in 2025?
Ayoko, when I was on the phone with Ruth Porat, I asked her if she would give me a revenue run rate number like AWS did. You probably remember last quarter. She said, "I'm not going to do that because we'll address it on the analyst call." On the analyst call, they said that year to date, they had billions of dollars of revenue from AI infrastructure and generative AI. And I'm just curious for like an investor like you, why wasn't that enough if it was so good for Amazon to give a number like that a few months ago?
I think it's on the spending side. I think historically we've seen that, you know, companies that spend more on CapEx just have less room on their free cash flow to spend on money being returned to shareholders. So, you know, that's probably the reason why the stock's selling off a little bit today. But over the long term, you know, the valuation for Google is not extreme. It still is a quality company. It still has a good business model. And I think it's pretty attractive at these levels.
What's so interesting is it feels as though Alphabet and indeed slightly Tesla are just shaking all of our concerns about the AI hype and the fact that this isn't going to be hugely revenue generating in this quarter or the next. How is your patience for AI to pay off, whether it's Alphabet or whether it's NVIDIA or some of the other names that have just gone stratospheric in the hope that AI is becoming a profitable reality?
Sure. So I think in the broader scheme of things, you know, this sell-off in technology shares across all of tech, I think it's actually a healthy thing for markets. We're seeing, you know, the broadening out of markets that we've been talking about for so long, and you're seeing other areas of the market sort of pick up the slack, which is great to see. You know, I think for AI, Sundar Pichai said it in terms of taking time. It's all going to take time. And when we look back at the cloud and the growth of cloud, that also took time. I mean, AWS, Microsoft Azure, and, you know, Google Cloud were all being built, you know, years and years ago, and we're just starting to see that benefit. And they're still growing at, you know, 25% plus rates. And so, you know, I think that AI is probably on a similar trajectory. It's just not going to be in a straight line.
Ayoko, Waymo, 50,000 paid rides a week, so Alphabet puts another $5 billion into it. Your reaction to that?
You know, I think just as Tesla's putting money into the robotaxi side of things, I think autonomous driving cars are, you know, something that is a long-term growth driver for many of these companies, whether it be Google or Tesla or even NVIDIA in terms of the overall chips that will be installed in many of these cars. So I think it's still, again, another leg that maybe, you know, again, take more time that investors don't always have the patience for. But it is another growth avenue for many of these stocks.
Ayoko Yoshioka, portfolio manager at Wealth Enhancement Group. Thank you.
Today, for our AI in Action segment, let's bring in Alex Rattray, CEO of Stainless. It's a company dedicated to building basically a platform for high-quality, easy-to-use APIs by building software development kits, SDKs, for AI companies like OpenAI and Anthropic. Company recently closed a $3.5 million seed round. Let's bring in Alex. And, what prompted you? You were building and doing this over at Stripe, basically, and you've taken it broader. How different is it creating SDKs for APIs over at AI companies? How much more difficult?
It's a great question. There's a lot of techniques that we use today at Stainless that are similar to the techniques that I developed at Stripe and powered Stripe's SDKs, but a lot of things are different. For one thing, we need to support a much broader variety of API design patterns, and that's true for just building a platform that can support any company to build a great developer experience for their REST API. That includes AI and non-AI companies. But for companies like OpenAI, Anthropic, and a wide variety of other AI companies that we support, we actually have to go a lot deeper to help developers really take full advantage of the full power of these APIs. They're much more advanced. They're richer with things like streaming and function calling, and that requires a lot more SDK expertise than even fintech APIs like Stripe.
You're a team of 10 with $3.5 million in the bank. Just talk to me about how difficult it is out there, how you're going to grow your business.
Yeah, great question. With companies like OpenAI, Anthropic, Cloudflare even, using our SDKs, and a bunch of smaller companies that are recognized within Silicon Valley as leaders in API-first strong developer experience using our product, we've seen a lot of inbound interest. I'm very glad that we've invested in building a strong platform for scaling out SDKs for a large number of companies, because it's enabled us to keep our team small, focused, and high skill, while serving a large number of API companies.
Stainless CEO Alex Rattray in today's AI in Action. Thank you very much. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
Caroline Hyde right here in London at the moment, Ed. Let's check in on these markets because we've had plenty to digest when it comes to Alphabet and Tesla. But look, there are other companies that posted earnings, and some of them, well, giving us some relief. Texas Instruments up 0.5%. Maybe that glut, the inventory glut, is coming to an end. We've got some reassuring signs that we're meeting expectations for the forecast. Really, it seems to be the revival is under the way in key markets. Look, there's still pressure on automotive and industrial, but maybe that's sort of the bottoming of that. IBM, 0.3% lower as we expect their numbers, of course, coming out after the bell today. Consulting likely to be a little bit weaker. Can software make up for it? Are we going to eke out that 1% revenue growth that many are anticipating? ServiceNow likely to see some 20%, 21% growth in revenue and indeed in earnings. But how much, again, are we starting to see appetite for artificial intelligence, generative AI, really manage to buoy some of their software sales at the moment when, look, companies are strapped for IT spending? I just want to take it on a gear, though, and look at what's happening with a story that just won't go away for CrowdStrike. In particular, we're currently seeing it off by 25% over the last 5 trading days. Look, we finally got some sort of answer to why this happened. The massive global IT outage was a bug in a quality assurance tool the company uses to check updates for mistakes. Basically, it allowed flawed data to go out to customers, causing last week's meltdown. And the meltdown in the stock continues. Let's just get a little bit of detail. Katrina Manson is with us, and we've all been waiting for further details. Can you give us the nuance as to, well, ultimately, why this is so unique, how this quality assurance step failed?
Can you even get the words out? Because it is so complicated and so detailed. And what we've now got is 5 days later, the preliminary incident report. Now this, right in the small print, takes us to what cybersecurity experts are saying is a welcome, detailed, transparent report, but it is still early days as they do what they're saying is their root cause analysis. And let me read it to you. Due to a bug in the content validator, one of the 2 template instances passed validation despite containing problematic content data. What that means is exactly as you said, the testing process for making updates in some way failed to flag an error. So that's two things. One, there was an error, and two, the testing process to find it also had a problem. And because CrowdStrike is so instrumental to what's called endpoint detection and response, really protecting computers, in this case, Microsoft Windows computers, 8.5 million of them, according to Microsoft, experienced the blue screen of death that affected hospitals, airports, retail, airlines. They're still getting back on their feet, some of these companies. They're trying to do automated fixes. They're still in recovery mode. At the same time, they're trying to share what went wrong and promising that there will be fixes.
The message from CrowdStrike is like, look, we're going to make sure, technologically speaking, that we know what happened and prevent it happening again. But as you write and I wrote about earlier in the week, we still are learning about how systemic this issue was, about how central CrowdStrike is to an important supply chain. What's the latest on that front?
I think this comes down to exactly that, the single point of failure. As we speak to customers, as we speak to experts in this area, it really does become clear that some of the things that protect people are also very, very closely nestled inside their systems. And so if something does go wrong, it has tremendous potential to affect everything. This is another one of those single points of failure that simply hadn't been noticed, caught, examined. And I think we will expect to hear from not only cybersecurity companies trying to make mileage out of this potentially and perhaps trying to take customers, but also really from those who look at cyber defense in this country and worry that there are simply too many holes.
Katrina, hold that thought. Bloomberg's Katrina Manson with the latest reporting on CrowdStrike. Other companies in the space. Let's stick with cybersecurity and bring in Gil Shwed, founder and CEO of Checkpoint Software Technologies, which just released its second quarter results, beat expectations, and also announced a new incoming CEO. And Gil, we will get to that, I promise. But you're in the game also of endpoint security. To start, what's the last 7 days or so been like for you and your company, incoming and outgoing, in your response to what happened with CrowdStrike?
So like everybody else, we've been watching it and supporting customers and helping in what can be help. It's not a cybersecurity bug. It is a software bug that shouldn't have happened. But it shows us how dependent us in software that can take the world up and down. And it's also a very strong, we need a very tight balance between these quick automatic updates and the cyber risks that are involved, because these quick updates are supposed to help solve vulnerabilities. And unfortunately, every week there's dozens of vulnerabilities that are discovered in companies, and we really need these quick updates to stop these attackers.
So Gil, have you changed anything? Has the industry changed anything, architecturally speaking, that would mean that this cannot happen and become the single point of failure again?
I think we are learning, I mean, the entire industry, and again, I don't want to exclude us, we need to learn how to create this balance between quick updates on one hand and avoiding vulnerabilities, and which is also very, very important. And I think that's a lesson that the entire world needs to learn.
Gil, I appreciate it's early in this process. There were questions about the future of firewalls. And I wanted to ask you about whether there's going to be this sort of architectural shift in cybersecurity in the landscape. Our analysts at Bloomberg Intelligence talk about a move to agentless delivery and security from agents, like in the case of endpoint security provided by CrowdStrike. Big picture, how do you see that playing out?
In the last 30 years, again, I'm in this business for 31 years, and I think we've kind of invested the network cybersecurity part of things with the internet. There's always, again, there's dozens of technologies, even hundreds of technologies. The two biggest ones are the network security and the endpoint technology. And I think we need both. I mean, it would be easy for me to say everybody will shift to the network. Many times people will say the other way around. But at the end of the day, we need both the endpoint security and the perimeter security, and each one of them complements each other. And still, with all of that, we're still facing a lot of cyber risks. They're just growing, unfortunately.
There is so much to talk about with your company and your industry, Gil, because you, of course, have managed to beat expectations in your earnings. You're seeing the revenue growth as it had been anticipated. You've got a new CEO coming in. But also, we've got M&A not happening, potentially happening. Google and Wiz, for example. Some of the interpretation is with your new CEO coming in, Nadav Zafrira, that maybe you'll do more M&A, that maybe you could be beefing up, pursuing deals. Do you agree?
First, I hope so. I definitely hope that we'll do more M&As. We've been doing 2 a year in the last few years, but we can do more and we can do bigger ones. I do think that what happening between Wiz and Google is actually very interesting. Wiz is an amazing company, built very fast leadership in the cloud security space. And I think the fact that they want to remain standalone and build a large company is something that we can all admire, because it will take them many, many years to get to the same financial numbers that they got with this, rumors about that deal.
We really want to talk about just how much you continue to be innovating over in this space. And Gil Shwed, come back, of course, currently CEO of Checkpoint Software Technologies, handing over those reins. He remains its founder, though. Ed, what have we got coming up?
Yeah, a lot more in the news. Time for Talking Tech. First up, hackers have leaked internal documents stolen from Leidos Holdings. That's according to sources. Leidos is one of the largest IT service providers to the US government, servicing the likes of the Pentagon and NASA. A company spokesperson says the leak stems from a previously disclosed breach and had no effect on their network or any sensitive customer data. Plus, Meta has removed over 63,000 accounts in Nigeria linked to scammers. The parent company of Facebook said they removed accounts who used its social media platform to blackmail and sexually extort its users. The mass removal took place at the end of May, but just 6 weeks after a Bloomberg article detailed the rise of sextortion, scams on apps like Instagram and Snap. And shares of NetEase are climbing. The company saw its biggest intraday jump in over a month as it gets set to launch its mobile game, Naraka Blade Point Mobile. According to Goldman Sachs, the game publisher is expected to generate sales of $880 million from the game over its first 12 months. NetEase says 40 million people have already pre-registered for the game. Clara.
Now you love a bit of gaming, Ed. Meanwhile, coming up, we'll have Bloomberg's list of 10 AI startups that you have to watch this year. That's coming up next. Meanwhile, though, keep an eye on certain shares. More earnings. AT&T added far more mobile phone subscribers than actually Wall Street analysts had expected in the second quarter. Fewer customers cancelling. Many adding wireless services to their broadband plans were up almost 5%. T-Mobile down more than 1%. Not their earnings, splashing some cash. $4.9 billion in a joint venture with a private equity firm, that's KKR, to buy fiber optic internet service provider Metronet. This is Bloomberg Technology.
Bloomberg is out with its second annual leaderboard of AI startups. The boom in AI innovation has led to tens of billions of dollars funneled into AI companies in just the first half of this year alone, from OpenAI and Perplexity to Suno and many more. These 10 startups you see here are some of the biggest and best funded to be watching right now. Let's bring in one of the co-authors and one of the assemblers of such a list. It is here, the top 10, Bloomberg's Rachel Metz. Let's start with methodology. Some of it's obvious. OpenAI and Anthropic are way up there. Perplexity, super interesting. But how did you and Shireen and Dina Bass put this together?
Yeah, so we used, some of it is a little bit of thinking, of like, what do we think should be on this list? It should be pointed out, this is not a ranked list, so it's not like 1 through 10. It's arbitrarily listed on the list. But a lot of it is related to their valuation, how much money they've raised, and also buzz, which is admittedly a hard factor to pin down. That's kind of up to your opinion.
Yeah, let's dwell on a company like Suno. Many of us have heard of the other players, but Suno, it's Massachusetts-based, it's $500 million valuation, but nothing in comparison to OpenAI. But why would you pick this particular AI music generator?
Yeah, Suno is one of a couple companies on this list that may sound a little surprising at first because it hasn't raised a ton of money. It's not worth a ton of money, but it has gotten a ton of attention in good ways and bad, both from people that are using it to make these very complicated sounding songs, kind of generating music that just wasn't possible until quite recently with AI. But it's also gotten the ire of the very famously litigious music industry. The biggest record labels in the world sued Suno and one of its competitors, Udio, recently, claiming that it used songs, copyrighted songs, unlawfully in its training data.
Let's go geographically, because I bring up a Cambridge-based company. These are largely US-based companies, actually, whether they be in New Jersey or whether they be in San Francisco. But there is, what, one Canadian, one French. Is it hard to find international winners right now?
I think there's an increasing number of really cool, strong, interesting companies all around the world. We actually relied on some of our Bloomberg Technology reporters that are in other parts of the world to help us figure out who in your geography do you think is most important. And also this year, to give a sense of how hard it was to figure out who should be on this list, this year we added an additional 6 companies that are ones we think people should also be keeping an eye on, and a number of those are from outside the US as well. So who knows, next year, those might be also on the top 10.
You know, I look at the list and how many of the news headlines and stories for those companies we've covered on the show, like super focused on their fundraising, like you pointed out. But I'm a user of ChatGPT and Grok, and I've kind of played a bit with Perplexity. How much was the sort of real-world use of the technologies those companies are making a part of your decision in saying, okay, these are the top 10?
That's absolutely some of it. I think OpenAI is an easy company to put on a list like this because you see it achieving in like the multiple different areas that we were looking at. It has brand recognition. It clearly has corporate users. It also has consumers that are really interested in the company. It's also raised a ton of money over time, and it's worth a lot of money. But some of these other companies, it was more like it was a combination of factors, but they might not have been up there on every single one. And it's true that sometimes it is hard to gauge buzz if you're entirely enterprise focused, right? Like we don't always know who a ton of your customers are, for instance, because a lot of companies are either still experimenting with AI and not like really using it in their daily practices, or they might not want to be super public about what software they're using.
Noted. Rachel Metz, you and the team as always doing great work. Thanks for bringing it to us. We appreciate it.
So very honored, and I pledge to you I will spend the coming weeks continuing to unite our party so that we are ready to win in November.
Vice President Kamala Harris there vowing to win the election in her first campaign rally. And after, of course, President Biden pulled out of the race and endorsed Harris, many Gen Z voters were quick to embrace the campaign through memes, video edits of the VP that have, well, since gone viral on TikTok, on Instagram, on X. Naila Zaidan can talk us through this. CEO of Future Caucus, a non-partisan organization for young policymakers. You join us now for more on basically what has become a meme frenzy. So quickly, previous speeches jumped upon. Brat summer has become, well, Kamala is brat. This is a moment for Gen Z to be awakened. Why is this happening so effectively?
I love this, and the fact that you just said on Bloomberg, Kamala is brat, is just an incredible turn of events, that history we're living through. I think, listen, you don't have to be a political expert to know that the past few weeks, months, years in politics have felt exhausting. The race between two people who we have seen this matchup before has felt static, and this moment has introduced some dynamism and frankly some joy back into, I think, what's otherwise a really tense political moment. And seeing the vice president's team capitalize on it, but also just a lot of organic content from random internet users really speaks to the sense of joy, I think, that people are infusing back into the conversation where it really was lacking.
Layla, one sec. Director, producer just telling me they're adding Caroline saying that to the show reel for 2024. For the benefit of our global audience, Caroline, and I have seen it, of course, and engaged with social media, explain brat to us, Caroline, please. Then we'll let Layla weigh in.
Well, Charlie XCX is Brat. Well, she's got this new song that basically is all about Brat Summer. And what is Brat? She says it's a female who's quick to laugh, who doesn't take herself too seriously, but goes deep, perhaps enjoys partying slightly. I mean, why, Layla, has this been a lexicon that's going to be different to mobilize Gen Z and to the point where we see perhaps Trump, to his campaign's efforts, thinking about crypto as the way to link to millennial or younger voters?
Yeah, well, the race really was about age for months, and ultimately President Biden made his decision in large part because of this push to move to a generational future that he just wasn't representing. And so the willingness to lean into something that appeals so deeply to young people, or at least sort of speaks their language, I think is people feel heard, people feel like excited, and I think I can't predict the future. I can't tell you how it will affect the vice president's campaign, in part because, we don't actually have an official nominee until the convention later next month. But I think one thing to know is that savvy social media users still need to use another phrase of the moment, live in the context, right? So Gen Z might have an absurd sense of humor, and they might really enjoy these sort of buzzwords and these trendy memes. But at the end of the day, they're serious and they're informed about policies they care about. This is a great way to get people's attention.
Layla, there is a serious side to it, which is also memes are a tool for ridicule, misinformation. So, generally this conversation's been about the positive reaction on social media to Kamala Harris. There is negative reaction too, and the content in support of her is also in competition with content in support of Trump and JD Vance, etc. Just explain the dynamic of that to our audience.
Well, social media has always been, I think, a really powerful way to reclaim negative terms, negative perceptions, and I think that can really work in a politician's favor if they lean into it, right? So even looking at President Biden with Dark Brandon, or last election cycle with Hillary Clinton's mention of deplorables and that becoming sort of a galvanizing cry for Trump supporters, I do think that if politicians or their supporters lean into some of the negative memes, it actually can be really powerful for them. But there's no doubt in my mind that social media really is boosting inflammatory content. It can contribute to worsening political polarization. It's actually something that Future Caucus works very deeply on, bringing young lawmakers together to get to know each other as humans and not digital avatars. But social media definitely has the potential to add gasoline to a polarized moment in history.
Well, for now, some are finding the positive, humorous side. There is a serious side to all of it. And Layla Zaidan, we hope that we bring you back on to discuss the pros, the cons of embracing social media in this campaign. CEO of Future Caucus, we appreciate it. Meanwhile, that does it for this edition of Bloomberg Technology. Ed, a big one.
A big one. So much to recap. Listen to the podcast. It's on the terminal, on Bloomberg platforms, as well as Apple, Spotify, and iHeart. I'm going to be off tomorrow, going to the football tonight. Chelsea, Wrexham. Caro, take you away from London. This is Bloomberg Technology.